Kenneth Andrade is a market master. He's founder and CEO at Old Bridge Capital Management. Kenneth, great to have you with us here. Thank you very much for your time. Appreciate it. It's been a while. So what do markets do from here, Kenneth? Because, if you flip that question, what will make you negative? Maybe there is perhaps at the margin some valuation concern. But what can cause a significant pullback? And most people struggle to answer. And that is the reason why, although some are waiting on the sidelines, that number is not very large. People want in, especially on the local side. What is your framework of thinking? What the markets do to the end of the year, Kenneth? Go on.
So the concern on valuations, I think, will remain for a while. I've been concerned about it for the last 1 year, but it doesn't really matter because over this period of time, the structure has only gone higher, or the marketplace has only gone higher. And I think the way the broader construct of the marketplace is, most of the negative news is going to come from outside the Indian economy. And that's largely got to do with the fact that the US by itself is now trading somewhere close to 65% of the world market capitalization. Now, we haven't had that kind of polarization before. India has also had its all-time high, and I think valuations here are close to something we have never seen before. So we're in completely new territory. So I'd be watching out for, or we'd be watching out largely for that. There's no way to time it, but we've been here before. I think this is it's a period of time that the breadth has to get narrow, and over the course of the next 2 or 3 years, it has to get extremely narrow. So if you work that entire framework out, we've got a positive bias on the economy, but a large part of that is already factored into the marketplace. So I look for international events, how they could play out, and how it plays out on valuations. But largely, valuations have to course correct over a period of time.
Kenneth, hi, good morning. Well, yeah, that valuation debate, that's been going on for a while, right? And the market's just been galloping away. But the difference is that there is a bit of a sector churn that's finally happening. Some leadership change. We're seeing the PSUs come off, and we're seeing some money go back into IT, some in banks perhaps. So you tell us, Abhin, what's the approach? Any changes to the portfolio? What's in, what's out, and how are you looking at the next 12 odd months?
Okay, for the largest period of time, as Old Bridge Capital, we've been talking about manufacturing, we've been talking about energy, and a large part of services were not part of that entire framework. I think now, looking in hindsight, if you have to extrapolate the same trends forward, it's going to be a little bit of a challenge because some of these businesses are trading at the market capitalizations in a cyclical industry, which some of them don't deserve. Now, I'm not bearish on manufacturing. I think from a GDP standpoint and from a country standpoint, we'll still be one of the fastest growing countries because I don't think, the momentum that we've already set out will continue into the next couple of years. But here's where we think we need to change the narrative a bit. Okay, we need to find companies that are going to dominate the international landscape. Now, when I say international landscape, IT services has proven the fact that they are large, they are resilient, and they're a mature industry, accounting for close to about 7 to 8% of India's GDP. Find industries like this. Find companies that go out and create an international footprint, and or industries that go out and get an international footprint. And this is without any help from subsidies at the back end. So I think that's how we're looking at our portfolio from, say, 2024, 25 to 2030. Look for large franchises that are getting built out in the international landscape. Look at market share gains, not just from an India context, but from a context of how these companies will dominate their industries globally. So we got a bias towards services. Okay, and simply put together, these companies have the skill set and have the right to win, if I might say, in the international economy.
Hi, Kenneth. Good morning and good to see you win. Well, what about the alcohol beverage space? That's seeing a fair bit of action, and you have played it in the past via Radico as well as Global Spirits. Now there is this, Andhra policy that could be taking, center stage in the next week or so, as per the new government. What's your view on the theme? Premiumization is coming back. You're seeing more launches as well, and it's an under-penetrated market. Your view?
Okay. I'm not too sure that it's an under-penetrated market anymore because apart from fuel, alcohol remains one of the biggest sources of revenue for the government. Right? That's one part of it all. The second structural thing that we're going through, okay, and this has got to do with beverages and it's got to do with everything else, every other consumer product also, is that if you're going to reverse that per capita income level from say $3,000 to $5,000 and upwards, you will have demand getting created at the top end of the market, and that would penetrate downwards, right? So the premiumization is led by that. The premiumization is led by the fact that that per capita GDP or per capita income is growing at the top end of India, the top end of the population, and which is why you're seeing not just alcohol beverages, but even higher end cars and anything that's got a premium tag to it actually do reasonably well. So that's a trend laying out. I think this is going to go through. Is difficult to grasp as to what how much to pay for some of these businesses, but every incremental growth in revenue or any incremental growth in volume is got a fairly magnifying effect on the profitability. So if there's a 10% growth in turnover from some of these businesses, the incremental growth in bottom line or in EBITDA could be as high as at 20% to 30%. So that's the operating leverage that premiumization plays out. And I think we're sticking with this cycle for a bit, as at least in the near future, volumes seem to be fairly robust.
Kenneth, just to go back to the earlier point, I was quite curious. You're saying that you're now having a bias for services companies in the portfolio, and that too companies with a large, global ambition and, capable of having a global presence. So what would that be? That would be IT services? I'm trying to think what else fits that description.
Well, you've got IT services for sure. We've got a fairly large exposure to pharmaceuticals and all our product basket out there, all our portfolio basket out there, has virtually 80-90% revenue coming from the international space. Don't rule out businesses like aviation. Okay, so that's how we basically putting it together. So like I said, when in the introduction, valuations at this level are reasonably pricey. Over the course of the next couple of quarters or probably a year, the breadth of the market has to narrow down quite significantly. You've also said this that there is a sector churn. Okay, so you've got to look at individual businesses that are growing into an environment and getting international cash flows, because now you're addressing 100% of the world GDP. Okay, so that's where we tend to look at constructing a portfolio.
No, got that. We'll leave it there. Kenneth, appreciate you joining in, and it's a pleasure having you with us. And thank you for your time here on CNBC TV 18.